For months, gold was on an absolute rocket ship, right? Smashing records left and right. And then, bam, in a single day, it all came crashing down. So we're going to break down the biggest drop in over a decade, figure out why it happened, and most importantly, what it all means for you.
To really get why this crash was so dramatic, you have to remember the climb. We were seeing this incredible bull run fueled by all sorts of economic uncertainty. It was the talk of the town. But as we all know, what goes up?
Well, it can come down, and boy, did it come down hard. Gold prices just plunged 6.3% in a single day. That's a shocking number that basically wiped out weeks of gains in just a few hours.
And let's put that into perspective for a second. This wasn't just a bad day at the office. This was the single biggest one-day drop for gold in 12 years. We're talking about a historic fall that really shook up the market. So I bet you're asking two really big questions right now. Why the sudden crash, and what on earth does this mean for me? Well, don't worry, we're going to get into all of it.
All right, let's put on our detective hats. It's time for the investigation. We're going to break down the 4 key reasons for this massive plunge. Think of it like a set of dominoes. We'll look at the 4 main ones that fell. First, the simple act of cashing in your chips. Second, a bigger shift in the market's mood. Third, the power of the US dollar. And finally, some sneaky technical triggers that turned a little dip into a massive dive.
First up, profit booking. And honestly, when you see the numbers, it makes perfect sense. I mean, with gains of nearly 60% just this year, a lot of investors were sitting on some huge profits. At some point, the temptation to just cash in becomes pretty overwhelming. Here's a simple way to think about it. Imagine you bought a jacket on sale, and suddenly it becomes the hottest thing on the internet. You'd probably sell it, right? You'd cash in on that luck. That's exactly what just happened with gold, but on a massive global scale. And it created this huge wave of selling pressure. Okay, the second domino was the mighty US dollar. You got to think of gold and the dollar as being on a seesaw. When the dollar gets stronger, gold, which is priced in dollars, remember, it gets more expensive for anyone holding other currencies. So what happened recently? The dollar got stronger, pushing its side of the seesaw up, which pushed the other side, gold, down. Simple as that. And that brings us to 2 more key factors. First, geopolitical tensions were easing up a bit, which reduced the need for a safe haven asset like gold. But second, and this is so crucial, technical triggers. You see, a ton of traders have these automatic sell orders in place. Once gold's price dropped and hit that magic number, a flood of automated selling kicked in, and that's what really turned a small dip into a nosedive.
So a drop this big feels pretty crazy, right? But has anything like this ever happened before? Well, let's take a quick look back in time.
Yeah, it turns out gold has had a pretty wild ride. Back in 1979, there was a mind-blowing 70% crash. In 2013, we saw a drop that was really similar to what just happened. And hey, even back in 2020, there was that sharp dip at the start of the pandemic, followed by a really fast recovery. The point is, volatility, that's nothing new for gold.
So what's the key takeaway here? It's that while a 12-year record is definitely a big deal, it's not totally out of the blue. These kinds of sharp, painful corrections have always been a part of the gold market story. All right, let's get to the part that probably matters most to you. What does all this actually mean? Let's get to the big so what. Well, it really depends on who you are. If you're a long-term investor, the general advice is, hey, don't panic. The big picture reasons for owning gold haven't really changed. Now, if you're a short-term trader, this is a minefield. You got to be extremely cautious. But for physical buyers, say in places like India with festival season coming up, this dip could actually be a golden opportunity to buy at a lower price. Okay, this is where the story gets really, really interesting. With all these traders selling to lock in their profits, you have to wonder, who is on the other side of those trades? Who is buying all this gold? The answer? Oh, just the biggest players in the entire world. Central banks are on an absolutely historic buying spree. India's central bank just smashed a record, crossing $100 billion in gold reserves. And big institutional investors? They're pouring billions into gold funds. So get this, they aren't just holding on, they are actively buying this dip. So, where do we go from here? Is this a correction, or is the crash just getting started? Let's look at what could happen next. The one number everyone is watching right now is $4,000 an ounce. It's this huge psychological barrier. If the price can stay above it, confidence might start to come back. But if it breaks below that level and stays there,
that could trigger a whole new wave of that automated selling we talked about. So, what are the possible paths forward? Well, analysts are basically looking at three main scenarios. Scenario 1 is a quick recovery if things stabilize. Scenario 2 is consolidation, where prices just kind of trade sideways for a while. Or Scenario 3, if that $4,000 level breaks, we could see a much deeper correction, maybe down towards $3,500. When you boil it all down, it really comes to this single tension. We are at a crossroads. On one side, you've got all this short-term fear driving traders to sell. And on the other, you have this deep, long-term confidence leading the world's largest institutions to buy. Which leaves us with the ultimate question, doesn't it? When you have the biggest financial institutions on the planet using this drop as a buying opportunity, can you really call it a crash? Or is it just a healthy, albeit dramatic, correction before the next major climb? The answer to that is going to define this market for months to come.